defending the free market, and making the moral case for capitalism. The Justin Moore Show. Hey everybody, welcome to the Justin Moore Show. Hello, welcome guys. Now, I've kind of done several episodes here talking about the economy lately. This will be the last one for a little bit until probably after the Fed meeting concludes on September 20th and the 21st. But basically what I want to do on today's show is, just kind of go through like some data that came out that basically makes more of the case that I've been talking about, that says, hey, look, the Fed should not be raising interest rates based on even more data that's negative for the economy. And that data that came out actually just before the jobs report, but the Fed was so distracted at the time with the jobs numbers that came below what the experts expected, that they totally missed out on the ISM numbers. And so what I have here is a Bloomberg article from September 6th, which was on Tuesday. Now, I'm just going to read a little bit from this article here, just kind of give you guys a feel for, and kind of give, a little bit of, it'll provide a little bit more context to the ISM number and why the number that just came out, why it's, kind of a big deal. Okay, so here we are from Bloomberg. An abrupt drop in the Institute for Supply Management Services gauge on Tuesday to a 6-year low is the latest in a string of unexpectedly weak data for August. Other less than stellar figures include an ISM factory survey showing a contraction in manufacturing, a cooling of hiring, automobile sales falling short of forecasts, and an index of consumer sentiment at a 4-month low. The ISM's non-manufacturing index slumped to 51.4, the lowest since February 2010, from 55.5 in July, the Tempe, Arizona-based group reported. The figure was lower than the most pessimistic projection in a Bloomberg survey. The ISM measures of orders and business activity skidded by the most since 2008, when the U.S. was in a recession. Readings above 50 indicate expansion. Okay, so what I just read to you here, this is not looking good, right? I mean, here it shows that we're basically, the non-manufacturing index, it's at the lowest point it's been since February 2010. And it was funny when I read here how the figure was lower than the most pessimistic projection in a Bloomberg survey. I mean, these experts are always trying to figure, okay, we got to be a little bit conservative with our numbers, because we don't want to way overstate it, or, so we got to be pretty close to accurate, right? Well, their most pessimistic projections weren't pessimistic enough. So, I mean, that tells you what these experts, their heads are in the clouds, They want the economy to be doing good so bad, but it can't happen. It's just not happening. And just to kind of give you guys a little bit more evidence based on this ISM number, get this. 7 of 18 industries in the ISM services survey showed a contraction in August, including retail, arts and entertainment, transportation and warehousing, and mining. That compares with 3 industries in the July survey. Okay, so what I just read here. Okay, so when we go back and we look at what happened in July showed that 3 industries were showing a contraction. Then we fast forward to August, 1 month later, and we have 7 industries that are showing contraction. Okay, so we have 4 more industries that have been added to the contraction list. And actually, when you look at the numbers, the ISM index in July was at 59.3, okay? And then if we look at what it was in August, what I just said was 51.8. So this is a drop in the ISM non-manufacturing survey of 7.5% from July to August. This is a way of reading business activity out there, and now that we have 7 industries showing a contraction, this is kind of a big deal. But no, here's Janet Yellen and all these guys at the Fed, these experts. They're ready to raise interest rates at any time. And basically, what happened, if you go back to last week, so when this report came out, talking about the ISM, you saw gold shoot up. Because remember, I was telling you guys last episode how gold and silver just sold off basically the last few weeks. Well, to start the week, and looking at, September 5th and September 6th, Gold was going up. Just on September 6th alone, gold was up more than $24. And then that's mainly because the dollar fell, because people are like, oh my gosh, the markets were like, okay, you know what? With these horrible numbers coming in, we have 7 industries showing contraction. Okay, maybe, the Fed, yeah, they can't raise interest rates with this stuff going on. They're going to fear a recession. Well, then, what always happens, we have all these Fed governors come out with their little comments. These guys were seen as doves on the committee, which a dove, those are the people who like, the easy money. When you see these guys who are seen as dovish on the FOMC committee, when these guys are coming out and talking a little bit more hawkish and like, yeah, you know what, it's probably time to raise interest rates. This puts the market through a loop. And so gold and silver, they start to sell off. I mean, they're not as low as they were the week before, but you saw the dollar rally, and especially on Friday, on September 9th, the markets really reacted. Now, actually, I'll get to that a little bit later. But no, let's just read a few of these comments that came out from these Fed governors. So this is from CNBC, this is a comment from the San Francisco Fed president, John Williams. And he said, the Fed could raise its 2% inflation target to 3% or even 4%, or shift away from inflation targeting altogether and instead target a nominal level of national economic output, Williams said. Okay, whoa. Look at what he just said there. So all along, the Federal Reserve has been talking about, they have this 2% inflation target. Now, they're trying so hard to reach this target, We need more inflation. Well, if we look at a 2% inflation rate, at that rate, if we could achieve that, which I argue that we are more than exceeding that number, but the way that the CPI measures inflation actually understates inflation. And all you guys listening to the show, you guys know this. But, if we take the Fed and, that's numbers for what they're worth. If we got the 2% inflation like they want, in 35 years, you lose half of your purchasing power, okay? You have $100,000 in the bank. And if you just keep it in the bank, you don't invest it, based on that 2% inflation rate, and you're not getting jack for interest right now in the bank anyway in your savings. And if we ever go negative, well, the bank will literally take it from you too. But if you had $100,000 in the bank in over a 35-year period, which you could buy with $100,000 today, will only buy you $50,000 worth of goods and services in the future. You lose half your purchasing power in 35 years at the 2% rate. Now, based on what this John Williams said, he's like, hey, maybe we should raise the inflation target to 3% or hell, even 4%, or let's just shift away from the inflation targeting altogether. This is what the San Francisco Fed president said. Okay, so let's look at that. What if we raise the inflation target to 3%? Well, that same $100,000, you'll lose half of it. You'll lose half your purchasing power in 25 years instead of 35. Okay, what happens if we raise the inflation target to 4%? At a 4% inflation rate, if the Fed were to target it at that, you would lose half of your purchasing power in 18 years. Okay, so here you are, you just had a kid. By the time that kid's ready to graduate, or, all this money you had saved so little Johnny or Susie Q could go to college, in that time frame, half your money has just been wiped out because of a stated inflation target from the Fed, okay? That's if we had the 4% inflation target. But here's that John Williams saying, hell, we should just get rid of the inflation target altogether. I mean, with comments like that, holy smokes. I mean, look at this is what these guys are talking about. I mean, the Fed does not fear inflation going over 2%. And that's why I think gold and silver should be more important to hold than ever before. Because I think the Fed is trying to hide that what they really want, what the end game is, which is inflation. And so far the market has not figured that out at all, not even close. Anyway, let's move on to here. We have a comment here from the Boston Fed president, Eric Rosengren. And he said, the whole financial complex, whether it's gold, oil, or equities, is dropping because the Fed is putting September back on the table, he said. And this Boston Fed president, he also he made this comment on September 9th, so on Friday. And actually, this really took the market through the loop. And we have, the S&P and the Dow selling off, gold and silver tumbling. from his comments that said, a reasonable case can be made for tightening interest rates to avoid overheating the economy. Okay, so here we have those two Fed governors making those comments. And then we have this other guy who I probably won't say his name right. But this is I'm getting this from CNBC. And this is also what affected markets on Friday, on September 9th. And this is reading directly from CNBC. As the week drew to a close and the Fed's quiet period before meetings was about to settle in, investors recoiled over news that the central bank's most dovish official, Governor Lael Brainard, will be delivering a previously unannounced speech Monday at the Chicago Council on Global Affairs. Okay, and so, as this episode's coming out on September 13th, so this guy's already made his comments on September 12th. So Lord knows what he says. But so the markets are reacting. Oh my gosh, this Fed governor, oh man, he's got a secret speech he's going to give. And so the markets are reacting to that. These markets, I just can't get over the games that the Federal Reserve is playing. How they make their statements, sounding like, maybe we won't raise interest rates, and then these Fed governors basically contradict what the Fed's saying. I mean, seriously, why does the market still believe what the hell the Fed is saying? Why? It doesn't make sense. It's the same story every single week. And after this meeting in September, then it's going to be, oh my gosh, the news is going to be, okay, well, they didn't raise interest rates in September. Oh man, they're going to do it in December for sure. And then you'll see gold and silver sell off. It'll be all the same game over and over again. Well, then, of course, we have the presidential election taking place before, the December meeting, if the Fed does raise interest rates then. But still, it's the same thing over and over, week after week. It's like I'm in the Truman Show. All these little actors, they have their positions they have to take and action. And everyone just goes through the motions. It's like, yep, that's what we got to do. I mean, seriously, how is the market so caught up in these games? And it's like they're not learning from, I don't know. I'm just so confused by all this. It's only a matter of time when the Federal Reserve totally loses its credibility. I mean, obviously, you guys can tell from my tone that the Fed's never had credibility with me anyway. Now getting to what I was kind of alluding to earlier, how the market sold off on Friday, September 9th. And, just pulling this from the Wall Street Journal, this is what they said. The Dow Jones Industrial Average fell 394.46 points, or 2.1%, to 18,085, and the S&P 500 declined 2.45%, making the biggest one-day declines for the indexes since late June, when a sell-off followed the UK's vote to leave the European Union. And we had the NASDAQ Composite lose 2.5%. Okay, so the market really sold off on Friday. And again, the main reason why the markets really sold off was apparently to a few of these Fed governors making these comments in this secret meeting. Lael Brainard guy, okay? I mean, seriously, the things that the market reacts to, like, this is just silly stuff. Like, what are you guys doing? And then, obviously, with the market selling off and people thinking that the Fed is acting like the older brother compared to all these other countries around the world with negative interest rates. We actually had German 10-year government bond yields turn positive for the first time since Brexit. Now, this is mainly because that over in Germany, they decided, you know what, maybe we won't just continue with the easy money like everyone else wants us to believe. And then we have the 10-year U.S. Treasury note actually on Friday climbed to 1.67%. And again, this is the highest. This is the highest we've seen the U.S. Treasury note hit since the Brexit vote. So there's all sorts of turmoil going on in the markets right now. And as I just keep saying in this episode, how the Fed just talks up the dollar. They go back and forth. The Fed governors contradict what Janet Yellen's saying. I mean, they're all over the map. And like the market tries to react to every single comment they get from every single Fed governor. It's like it's a cluster, that's going on. But just sitting back and just watching this from afar. I mean, I'm over here in Montana. Thank God. I'm so glad I'm way far away from Wall Street, getting caught up in that mess. But eventually, these guys playing this little game, they're going to realize, hey, this is pretty serious stuff. And, it's not going to end well. And so I guess these guys can enjoy playing their little game while they still can. But I know what I'm doing with my money, and I do not trust any of these guys. What they are going to do is they're going to continue to destroy the dollar, just as whoever is elected president, if it's Donald Trump or Hillary Clinton, and they will both grow the size of government. What happens when you grow the size of government? Well, you need more revenue, right? The government has to spend more of our money. How can an economy recover when the government continues to spend more and more money, taking it from the private sector? I really got into this in last week's episode. It's going to just keep prolonging this recession that we've been in since 2008. Is what's going to keep happening, and eventually, that crisis is going to come that I've been talking about. Our day of reckoning, how these low interest rates, how they have set the stage for this massive misallocation of resources. When this actually comes out in the open, all this time that these businesses thought that they were engaging in, in these long-term investments, taking advantage of these low interest rates. Oh yeah, this seems like a really good idea. We got to take advantage of these low interest rates. Well, we have a lot of businesses that are lengthening the structure of production that will be forced to shrink because we don't have the savings to back it up. And that's exactly why booms and busts happen in the first place. It's not like what all these socialist types like to believe, and Keynesians, that booms and busts are just a result of capitalism. No. Boom and bust cycles happen because of fractional reserve banking and the Federal Reserve artificially lowering the interest rate. And that's exactly what's going on right now. And actually, speaking of socialists, a few weeks ago I was singing karaoke, out here in local bars here around Billings. I started talking with this girl that was there at the karaoke bar. She sang a few songs. And I come to find out, talking with her, she's a socialist. And, so we start talking. I give her my card for my show. And on my business card, it says, defending the free market and making the moral case for capitalism, my slogan here. And she's like reading that to herself. And she's like, defending the free market, making the moral case. Capitalism? Whoa, capitalism. Like that sounds absurd. Like, how can you embrace capitalism? When she kind of gives me that look, I'm like, you're damn straight. Capitalism all the way. You're damn right. And then she started asking me some questions, and actually ended up saying like she had so much to talk about here. She had so many questions about all this sort of stuff, and like just kind of stunned how I was defending myself and embracing capitalism, because most people are just so sheepish and they can't defend it. Well, anyway, the bar closes and it's like, hey, I'll take you out to dinner. Let's go talk about this. And so we did, and she started asking me about monopolies and regulations in general. Like, you need the government for regulations, of course, or like, monopolies. It's like, well, obviously you have to have the government to stop these monopolies and these companies getting out of control. And, I make the point I've done on my show. It's like, hey, look, monopolies cannot exist in a free market. Only temporary monopolies can exist. If people always like to talk about with monopolies, how basically a company will lower the price, just to get all the other competitors out of the way. Then once all the competitors are out of the way, then once they have a monopoly, they can jack up prices, so then they can take advantage of their position that they're in. And that way they can have monopoly prices. But that can never happen because when you jack up prices like that, that encourages competitors to come in and to compete against you. And there's, of course, and there's all the other things that take place. And but what's interesting, and, just talking with someone like this who comes across and who is a socialist, you can learn so much from talking to these people. And I think a lot of these people, when they do talk to other people, and a lot of these socialists, when they do engage with other people, like say if you just talk to the average Republican out there, they can't defend these ideas like you and I can. Like if a socialist brings up, well, of course you need the government for monopolies, right? Well, the Republican will be like, okay, yeah, of course, we don't want big businesses to get out of control. That's what the average Republican does. Or any of these other sort of ideas, regulations. Oh yeah, you're right. Yeah, we do need the government for regulations, this sort of thing. But when you let big government types slide with those ideas, and you just go along with them, and they're not challenged, you basically come to the agreement that government's good. Yeah, we need a mixed economy. That's that's for the greater good, that helps our economy go. That's what's created this prosperity that we have today. That seems to be how a general conversation happens between two people, right? But we as libertarians, when we understand the facts, when we are truly informed and we can make logical arguments, that make sense, we can lure these people over, because we are the most consistent people out there. Because I do it on my show here. I keep pointing out, hey, look, a big government is destructive. Government is destructive. Anything that they touch, they destroy. The people they want to help, they destroy. The poor, the middle class. Those are the people who are hurt the most by big government. And when you make these arguments to them and you point out the destruction of what government has done, you can win these people over. But here's an important thing to do. What I did when talking with this socialist girl, and actually I made the point to her when I was talking with her after we concluded dinner. I'm like, you know what? You're not bad for a socialist. And then she corrected me and she's like, oh, I'm a democratic socialist. Okay. It's like, all right, whatever. But anyway, when you ever get the chance to talk with, say, a socialist or someone who's a liberal or, whoever it is, a conservative, and they don't necessarily agree with, what libertarians say in general, that libertarians sound crazy as hell, bat crazy. Whatever you do, when you sit down and talk with these people, don't try to prove that you're right. When you want to sit down, you just want to have an entertaining conversation. You want to be open-minded as well. Like, hey, I want to listen to what you have to say. Yeah, listen to me. I can share some of my ideas with you. You share some of your ideas with me. Yeah, let's flush it out here. And when you do that, and when you don't disrespect someone, you keep their mind open. And as long as you're polite, and as long as someone's mind is open, that gives you the chance to plant new ideas into their head, a way that they've never considered before. Or with our education system today, the average person, they haven't heard any of our libertarian arguments. They've never heard them before. And I could tell when I was talking to this socialist girl that she had never heard a lot of my arguments before. And so when you open someone up to these ideas, plant the seeds, and who knows what'll happen. Maybe she will accept them, and it seems like she's definitely has been open to it, and she actually kind of agrees with a lot of it. Because and it is kind of interesting too. Here's Gary Johnson. He's the libertarian running for president, obviously, and it seems like most of what he's been trying to do here is appeal to the socialists. Here he is talking about cap and trade. I mean, it's like one thing after another. It just sounds, it's big government, big government. But at the end of the day, maybe, it might be me thinking about it in like my recent conversation with this socialist girl, democratic socialist, I'm sorry, Annika. Maybe they're just as easy to convert as a conservative is. I mean, even though it sounds like they're way on the other side of the spectrum. But no, I do agree with Bernie Sanders on quite a few things, like especially the problems, but just the solutions are way off. But like with Gary Johnson here, I mean, this guy better not be taking, it sounds like he's taking a guy like me for granted. Like, oh yeah, Justin, he's not happy with Donald. He's not happy with Hillary. He's going to vote for me. So I'm just going to go for the socialists. I'm going to be this left-wing type. No, Gary, you do not have my vote. And the way you're going right now, I'm not going to vote for you. I don't know. I think if we really do want to make a stand, especially the way Gary Johnson, he's acting certainly not like a libertarian. So I think, if I want to make an impact with my vote, I think I'll write in Ron Paul's name. Imagine if Ron Paul had a few percentage points from the popular vote. What message would that send to the Libertarian Party? Like, hey, we want libertarians like Ron Paul, not like Gary Johnson, this buffoon. Like, what's he doing? I mean, Gary Johnson, come on. It's bad enough that you're not the best communicator out there. I mean, you're so horrible at communicating, you couldn't persuade a dog to sit if you had a juicy steak in your hand. I mean, you just come off as like some of your answers, like really sheepish and like, you're really unsure of yourself. Like, blah, 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 blah. And then we got old Bill Weld. he basically speaks for you. Actually, the way that when you see these two in interviews together, it's like, Bill Weld is a ventriloquist, and, Gary Johnson's just the little puppet of Bill Weld's. But, people, hasn't Gary Johnson learned anything from Donald Trump? That, people like someone who's bold, like someone who tells it, like it is, like who's confident in their views. Like, yep, I have the answers. This is what we need to do. I'm going to build a wall that works. Believe me. People just love that confidence, and it makes other people confident with a guy who has confidence. Gary Johnson doesn't have any confidence in his ideas. Like, come on, Gary. You're a former governor, for goodness sakes. So Gary Johnson, if you really do want my vote, you better turn around what the hell you're doing right now, because I am not going to vote for you either. And I will write in Ron Paul's name if Gary Johnson doesn't turn stuff around. And so anyway, guys, and as I said to start off this show, next week I'll take a break from the economy. We'll talk about some other topic. There's just so much stuff going on that we can get to, so many different topics. Anyway, guys, if you can go to my website, if you want to catch up on older episodes, just go to justinmooreshow.com, more spelled M-O-H-R. You can also find my show on iTunes. You can write a review for my show on iTunes. It takes you 30 seconds. You can give me 1 to 5 star, whatever you think I'm worth. Just write a little review, and I could just read it here right on the show. And if you want to, please, if you guys do shop through Amazon, you might as well just click on the link through my website and purchase your Amazon goods, right? Because that way it helps me out. I get a little commission back. It doesn't cost you anything extra. And it just kind of helps me keep chugging along over here. Helps me promote the show, get the word out there, so we can convince and bring more people to our side. Because there are people open to our ideas. It's just a matter of reaching them. Just like when I was talking with that socialist. Our ideas are effective. It's the people who are the least effective arguing who do not have a chance. It is the people who are arguing for the R team, who are arguing for, yeah, go Republicans, or yeah, go Democrats. Those people have no credibility. And those two people, they can bicker back and forth all they want, but both parties are so inconsistent, and they have no principles whatsoever. Seriously, when you come into any sort of conversation and you're the voice of reason, the libertarian, like you kind of agree with a little bit of what each might say to a certain extent, you can have an impact on those people. So ladies and gentlemen, let's get out there. Let's bring our friends and family into this movement. And let's just keep growing this thing. We need more people to accept our ideas, or at least be open to them. At least we need to plant those seeds, right? And so guys, I just thank you guys so much for being here today. I will talk with all you guys next week, and I'm looking forward to it. This is Justin Moore, signing off.